Morning, Steve Free in Chicago with the morning grain comment. Well, it's Thursday. Normally, we'd be trading export sales information and also be looking at weather and tomorrow's USDA report. But the big news overnight is that it looked like the U.S. and Chinese have come to some kind of agreement to phase out the tariffs that have been imposed during this trade negotiations. And so that's one step closer maybe to getting a trade deal signed. Yesterday, though, all the news was negative. I mean, they couldn't figure out a place to have a venue. They were going to delay signing into December, discuss more problems with some of the issues. And so, you know, it's like, boy, if I knew these tweets were going to come out, I could probably trade the stock market pretty good. So there's been a lot of volatility in the marketplace, and today the glass is half full, and we're looking at stocks being higher. Beans are up about 4 cents, while corn's up a penny, wheat's up a couple of cents. So it's kind of following the lead of the outside financial markets because of a potential deal. Again, number one, we don't know the specifics of when a deal is going to be signed. And number two, when they're actually going to start coming in and buying ag goods. You know, we continue to see a good commercial stopper in the soybean deliveries. Some people think that, well, it doesn't pencil, that they take barges out of Chicago down to the Gulf. They may be a hedge against Chinese coming in and getting some beans. If not, they can just put the receipts back out. But we also have no wheat receipts, and we don't have very many corn receipts as the December contracts first notices approaches. So it just seems like the slow harvest, lack of farmers selling, is getting the pipeline pretty thin right now, especially in the corn. Yesterday was one of the first days that we saw the Dece March spread react to that, Dece gaining on the March. So we're just kind of see how things play out. As far as weather is concerned, yesterday they were talking about in 2 weeks a pretty big storm moving across the Midwest. Prior to that, next week is going to be pretty cold. And one of the things that we keep hearing out in the Midwest is that elevators are slowing. They're drying down because they can't get propane. And a lot of farmhouses in the Midwest are also heated by propane. So this has become a critical issue in the Midwest, the lack of the propane gas. As far as export sales, we're looking for somewhere between 300 and 600 corn, maybe 600 wheat, all numbers that are below pace to meet the USDA's export number, and 600 to 1 million tons of beans. Again, the Chinese supposedly were more active in the last week in buying beans, and I think they're getting out into that January, February timeframe to try to fill in what they need. We'll also be looking at, as far as prices, we're still in a range in beans, pretty broad range between 9 and 9.50. We need a supply shock to push the market higher than where we are now. These corn 360 to 410. Again, we need some kind of lower crop number from the USDA to test the higher end of the range. And we need a farmer to pick up and increase sales to go down to the lower end of the range. Wheat's in this fairly big range between 460 and 560 and thereby, and we've been trading up recently because of higher world wheat prices. So we'll see how far we move as we get the USDA report tomorrow and get more clarity on whether there's a deal or not between U.S. and China. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day.